The second option would be to file an application for reduced withholding. So let's say the seller comes in and says, well, but when I purchased the property, I paid a lot more than I'm getting out now. So I actually have a loss on this and I don't want to pay the tax to the IRS because at the end of the day, I don't owe any tax. Is there anything we can do? And they come to us and we say, yeah, there is. We can file an application for reduced withholding. That is form number 8288B. And it is submitted to the IRS before closing with a whole bunch of supporting documentation. And I will get into that a little bit in a little bit more detail in the examples that are coming. Usually the IRS takes about 90 days to process the application for reduced withholding. I say usually. In the past few months, it has taken longer just because of COVID-19 and the fact that the IRS offices have been closed for a while. The FIRPTA unit has picked up working again, and they are processing forms as we speak. We have received a few of the withholding certificates for which we have filed applications at the beginning of the year. So right now it takes about 8 months instead of 3 months, but still they're working on. And I will show you what the advantages are in the next slides. In this situation also, again, everybody needs either a social security number or an ITIN. And with these, the ITIN application actually does have to be submitted with the 8288B application at the same time. So let's go into a few examples. This was a case that we dealt with, a property located in Naples, Florida. As you can see, the sales price was $12.7 million. And we have here the purchase price of the lot. They actually built the house and had a whole bunch of improvements and things done. So you can see that here. And when you file an application for reduced withholding certificate, you have to send in supporting documentation showing what you paid. So in that situation, we had to show the deed or the settlement statement for the purchase of the lot, the construction contract, everything that we have listed here, we needed receipts for, and they needed to be submitted. So when we calculated this, we came to a capital gain of a little over $2 million. The regular capital gains tax rate right now is 20%, and that does apply to foreign persons as well. So if we look at this, that means that the maximum tax that this person owed was $444,000. Now, if you do the math, the 15% FIRPTA withholding on the 12.7 million is $1.9 million. So in that situation, the client was like, well, they're going to take 1.9 million and submit it to the IRS, but I only owe 444,000. So we submitted this application for reduced withholding to the IRS. And while the IRS works those cases, the money does not have to be submitted. At the time of closing, it still needs to be withheld. So the title company keeps the FIRPTA withholding in their escrow account, and we wait until the IRS issues their reduced withholding certificate that tells us how much money they actually want. And in our cases, they usually want the amount that we calculate as the capital gains tax. So for the flow, let's look at this. So we have, and I made this fairly easy. We have the seller and the IRS and the buyer represented either by the title company or the attorney, or well, the transaction is dealt with by the title company or the attorney. So we have the sales price of 12.7 million. The closing was at the beginning of the year. We represented the seller. So as the seller's representative, we filed the application for reduced withholding certificate with the IRS shortly before closing. That's important. It needs to be filed on or before closing. If you do it after closing, it's too late. The title company has to submit the money and it goes a separate way. We also sent a copy of the 8288B application to the title company so that they know this was submitted, and that allows them to hold on to the money and not have to send it to the IRS with the 20 days that I mentioned, within the 20 days that I mentioned earlier. Now, like I said, I made this easy. The title company keeps the 1.9 million and gives the rest of the money to the seller. I didn't include any commissions and fees and stuff that makes it too complicated for this presentation. So the buyer gets the the seller gets the difference. And then we wait for the IRS to process the application, which we received a little while ago. So the IRS looks at the documents that we submit and they say, okay, we agree, you only owe $400 and something thousand. That is printed in the reduced withholding certificate, and that gets sent to the buyer, to the seller, and to a third party that you can put on the form. So there's 3 people that could receive that form, so everybody is informed by the IRS. So after that form is received, what the title company does is they give the amount that the IRS wants. In this case, they rounded it up to $445,000. They submit that to the IRS with the forms 8288 and 8288A. And the rest of the money can go back to the seller. Now, in the next year, so this transaction happened this year. Next year, the seller has to file a U.S. income tax return and has to report the sale of the property again. The 8288B application is just a preliminary form to reduce the tax withholding. It's not a tax return as such. So the seller files a tax return. The due date for foreign people is not April 15th, it's June 15th. So by that time, he needs to file the return and show the capital gain again. If nothing else happened during that tax year for the seller, then there's not going to be any tax due or any refund due, because the amount that was paid is the actual capital gains tax. Now, in some situations, the seller sells multiple pieces of real estate in one calendar year. And let's assume that maybe with one property, they incurred a loss. Foreign people can offset losses with gains in one calendar year. So that potentially could lead to a refund of some of the withholding on that property. The 8288B application always looks only at one property at a time. And you can't, in that application, you can't offset any losses or anything else. So in this situation, we help the client receive a big part of his refund a lot sooner. If the title company had submitted the full 1.9 million to the IRS at closing, then he would have received the refund sometime in December of next year after the tax return is filed, and compare that to when he actually received that was last month. So we saved him over a year of time on the actual refund. Let's look at another example that makes this even worse for the client. They sold property for $355,000. They had invested more into it, so they incurred a loss of almost $100,000, which means there's no tax due. There's no taxes calculated on losses. Nonetheless, at the time of closing, this property was still subject, or the transaction was still subject to FIRPTA withholding of $53,000. So when the client heard that, obviously he was upset. He's like, well, I don't owe any tax. Why should I pay this? And again, we did the same thing. We filed an application for reduced withholding certificate, this time showing the IRS that there's no tax due. It's not just even reduced. The tax is not just even reduced, but it's zero. So the process is as that again. The title company keeps the FIRPTA withholding at the time of closing. We wait until the IRS issues, this time, a zero withholding certificate, not a reduced withholding certificate. And at that time, the title company can give the full FIRPTA withholding back to the seller, and it doesn't have to send anything to the IRS. Still, seller has to file an income tax return next year, report the sale, and there's no refund since they never paid any tax in the first place. I have one more example that shows a situation where the client opted not to file an application for reduced withholding. And that was where they actually had quite a nice gain on the sale of the property. And the tax was, as you can see, at 62,820. The FIRPTA withholding 15% on the 500,000 was $75,000. So the refund amount is, roughly a little bit over $12,000. So for that, they were like, well, I don't feel like, finding all the documents within the short time frame before closing, and they were obviously out of the country and things like that. So they're like, you know what, we'll just submit the money to the IRS or have the title company do that at the time of closing. So they did. They submitted $75,000 to the IRS, or well, actually they will, since this closing hasn't happened yet. So they will submit that to the IRS, and the seller gets the difference minus commissions and things like that. And then next year, what they have to do is file a tax return. They show that they were subject to FIRPTA withholding, and actually the receipt for that is the 8288A form that shows how much was withheld. And then they will receive their refund after the IRS processes the income tax return, and it's calculated that there's still a little bit of a refund of the roughly $12,000. So those were the 3 examples of the flow. If you have questions, we'll address those after. I will talk a little bit about the items. Application for individual taxpayer identification number. It used to be really easy. A long time ago, you would just submit the form W-7 yourself. Anybody could do that. Any taxpayer could do that, send it to the IRS, and the IRS would send you a letter with a number. It doesn't work like that anymore. Now you have to submit documentation that proves your identity. And it's either, if the taxpayer does it themselves, they need to either submit a certified copy of their passport, and the certification needs to be done by the government office that originally issued the passport. So they need to go, to the office in whichever country they live in that issued the passport and get a certification. Or if they can't get that, they need to send the original passport, which I would never recommend that anybody does. Or they can use what is called a certifying acceptance agent, and Allure Accounting is one of those, where we can certify their passports for them. So in those situations, what we do is we look at the passports, we certify the passport, and that alleviates the burden on the taxpayer to have to submit any other documentation. It gets submitted with the W-7 application, and the IRS usually takes about 6 weeks to process those. They're still a little bit behind because of COVID this year. It's taken a lot longer, but the ones that we're processing now, hopefully they will go back to the 6 weeks time frame. So what that means too is when an 8288B application is filed with an ITIN application, that prolongs the processing time at the IRS a little bit. We need to add those 6 weeks to the 8288B, the application for reduced withholding processing time. So let's say we have a closing where you represent a US seller and you have a foreign buyer on the other side. The good news on that is, since you have a US seller and not a foreign seller, this transaction is not subject to FIRPTA. So you don't have to worry about any of the stuff that I just told you about. However, in an effort to be proactive in representing your foreign buyer, if you are representing the foreign buyer, you might want to tell them that they should go talk to a CPA to get some information on what it is that they get themselves into in reference to taxes. We see a lot of foreigners buying property. They never get any information on whether they have to file a tax return, an income tax return, or whatever. And that is the important part where I circle back to the fact that our first consultation is free. So if you're representing a foreign buyer, you can tell them to contact us. I will explain to them what they need to know. If there's nothing they need to do, that's great. They got a free consultation. And if there is something they need to do, they still got a free consultation, and they can decide what they want to do. The two things to be aware of is income tax considerations and also estate tax. For income tax, obviously it is if they decide to rent the property, and it never ceases to amaze me how many people think that they don't have to file a tax return even though they have rental income in the United States. There's all kind of misinformation out there that says, if the expenses are more than the income, you don't have to file. That's not true. If you have rental income in the US on a property that's located in the United States, you have to file an income tax return every year, even if you are a foreigner. The next thing is estate tax considerations. Now, estate tax is something that most Americans don't think about a lot, at least not right now, because of the big estate tax exemption that we have right now of over 11 million. That exemption does not apply to foreign people. Usually, or per Internal Revenue Code, their estate tax exemption is only $60,000. So let's assume they own a property for $350,000 and they die. Then only 60,000 of that is estate tax free. The rest of it would be taxable under the estate tax rules in the United States. And the estate tax percentage is still 35%, so that can hurt pretty badly. And if the property is worth more, even worse. There are ways to structure these situations to optimize estate taxes, but obviously they need to know about it. And that's why they need to come talk to us when they buy real estate. Don't wait until they sell it or until they die. Then obviously it's too late, and the heirs will have to pay the estate tax in the United States. Okay, so that was it. I will open it up for questions. Elke, if you can unmute yourself first of all, and let's see and go to the chat and see if anybody typed anything in, or if anybody wants to unmute themselves and ask their questions, feel free to do so.
Okay, I'm okay. Let's go here over the questions. Randy is asking, a common exception for FIRPTA is the property is $300,000 or less and will be used as buyers or their families members, personal residence for at least 50% of the days the property is used during each of the first two 12-month periods following the sale. We are about to do a closing on a property where the buyers will be using the property as their weekend vacation home. They will personally reside there and have their own belongings in the vacation home, but it will be not their primary residence. Does the exception apply?
Yes, it does, as long as the number of days they use it is more than the number of days it's rented. However, from the way you described it, it sounds like they're not going to rent it at all, since they're going to leave their personal belongings unless they want to lock those away every weekend. So if they don't rent it at all.
Yeah, they're not going to rent it. It will be used as their second home.
And it's not going to be rented at all?
Not at all.
Okay, then yes, it qualifies.
Thank you.
So Marsha is asking, do you suggest consult before going to contract?
Yes, and with most clients, with most realtors that we work with, they send us an email or let us know, here I have another sale coming up, or another list. I just got another listing here. Can you talk to my clients about that? So the sooner we can get the process started, the better, because most of the time the sellers need to go and retrieve documents somewhere. Sometimes they have them in their property in the United States, but they are outside the country, so they need to send the property manager and get the documents. So the sooner we start this, the more time to do these things. The actual the work on our end with filing forms with the IRS can only start after we have a contract in place, but that doesn't mean that we can't get started with the preliminary work before.
And there is a second question from Marsha. Best way for foreign buyer to take a title LLC?
Okay, I'm going to need a little bit more clarification on that. I'm not sure what.
Marsha, are you?
What,
Yes, I apologize. Barking dog in the background, so I'll make it brief. So foreign buyers, I'm also in the Florida Naples market. Several of them have taken title under LLCs, but I've recently heard just a little blip that is not the best policy going forward.
that depends. In most cases, and having an LLC as the property owner is a good idea. As I said in the beginning, if it's a single member LLC, it won't prevent FIRPTA, which, I mean, it's you know, it's not a big, I say it's not a big deal. FIRPTA is just another thing that we have to deal with. They have to pay the capital gains tax that they owe in the United States either way. And FIRPTA is really just a prepayment of a tax. Now, obviously you have to jump through a few hoops, but I've never seen that anybody pays more tax than they actually have to. So the IRS does refund what they're entitled to. If it's a multi-member LLC, so if it's a husband and wife situation and they both own the LLC and that LLC buys the real estate, then that LLC would not be subject to FIRPTA. So that makes it easier for them at the time of closing. However, the LLC still has to file a tax return and has to pay the tax that is due in the United States. So there's never a way around that really. But it does make that easier. So we deal a lot with LLCs and it's still fine to do that. Now in reference to estate tax, well, we would have to look at the individual situation to see if an LLC would work for estate tax regulation and to make sure that they don't owe any estate tax in the US. Sometimes it's better to have a different company, use a different type of company to do that.
Are you fine with that, Marsha? Is this okay?
Yes, thank you. The dog has stopped barking, so I can comment on that. Thank you. That's really great information. Starting up again. Going back to mute.
Okay, I think there was also a question I hear from BA. It says, I may have missed it, but do you handle all states?
Yes, absolutely.
Thanks,
And
Randy.
actually talking about that too is, I mean, I am in Florida here and we don't have personal income tax, Florida personal income tax, but in some states, the states add a FIRPTA to the transactions also. So that is something else that needs to be dealt with in certain states, but we can do that too, yes.
So Teresa is asking, is there a penalty if seller doesn't do any filing of docs if they indeed sold below their purchase price? First question. And not only work in all states, but any differences among states?
Okay, I think I just covered that with the differences in the different states. FIRPTA is a federal law, so that applies to all states. And then, like I said, in certain states, they have their own withholding requirements on the sale of real estate, and that depends on the state, but we can deal with that too. The first question, can you repeat that again, please?
Yeah. Is there a penalty if the seller doesn't do any filing of docs, if they indeed sold below their purchase price?
Okay. So if they don't want to submit any documentation, then we can't really file an application for reduced withholding, or we can, but it wouldn't be successful. It will be rejected by the IRS because the requirement is that you substantiate your deductions or your expenses. So if they don't have any documentation, then we wouldn't file an application for reduced withholding. And that would automatically put option 1 in place, which means the title company has to submit the money to the IRS. And then if the taxpayer wants any of it back, or all of it, since they have a loss, they will have to file the tax return in the following year, showing what their expenses were, but then they don't have to submit the documentation, at least not until the IRS decides to audit the tax return. So it would just be a regular tax return where they report the expenses, and that would most likely result in a refund, and most likely there wouldn't be an audit on that. So that would be the way to not have to initially have to submit any documentation other than a regular tax return.
But now that assumes obviously that they are going to submit a tax return of some kind, or that they are part of that. But what if they're already out of the country and they are not partaking in taxations anyway? I mean, really, there is no recourse. And I only bring this up is because I had an example of a seller who they had moved on to another country. They no longer participated, but they still owned real estate here in America. And ultimately they just decided to sell it at a loss, and then did not file anything.
Okay. So if it's, okay, it doesn't matter whether it's a loss or not. Then so if the property was if the sales price was 300 or under, and the buyer fell into the personal use thing and they signed the affidavit, then they wouldn't have had any FIRPTA withholding, which means that they didn't pay any tax in the United States. Now, if they left the country, technically the IRS could go after them, but if they're in a foreign country, it's very hard for them to do. If they had FIRPTA withholding done, so if the property price was over 300,000, then the title company was required to do FIRPTA. And if they don't file anything, then they lose their FIRPTA. Does that make sense?
Yes, thank you.
Are you fine with that, Teresa? Everything good?
Thank you.
Yeah, so I can switch to the next one.
Yep.
Van is asking, entity structure for holding U.S. real estate should be taking into act their home country tax.
Yes, absolutely. And we do that a lot. We consult with our home country CPAs to see, to make sure that what is best for U.S. purposes also works for their home country tax laws. Yes, absolutely. And there are some things that work well in the United States for these things, but they don't work in foreign countries. And the one example is that for a U.S. limited liability company works well for us, but it doesn't work for Canadians very well because of the way Canada taxes a limited liability company. So those are things that need to be taken in consideration for sure. Yeah.
Ben, is this okay for you? Are you fine with that? Do you hear me? Hopefully.
Well, if not, since we can't hear you, if there's anything else, please type another question in and let's move on to the next one if we have another one.
Okay, otherwise, send me a chat, send me a message. Next question is, as a U.S. citizen that is considered a foreign buyer in another country, what are some advanced considerations? VIP is asking.
Okay, so let me rephrase this. And can you unmute yourself so you can give me some feedback? So we're looking at a U.S. citizen that is buying property in a foreign country, not in the United States.
Correct.
Okay, that would not have anything to do with FIRPTA since he's a U.S. citizen. However, if he sells, so is the question what happens with the real estate in the foreign country once he sells it?
Yeah, so it's kind of the reverse of what you're talking about today. It's the way I see this is we're talking about a foreign party purchasing in the U.S., but what if it is the exact opposite? Okay. A U.S. party purchasing in another country and then looking to bring those proceeds back to the U.S.
Yeah, okay. So first of all, that person would have to consult a CPA or a tax attorney in that foreign country to see what their obligations are there. In addition to that, from a U.S. tax standpoint, so if they receive rental income from the property in the foreign country, then that income needs to be reported on their U.S. tax return, on the 1040 return, and they can still take the expenses as deductions. So it is treated as if it were a U.S. real estate property at that point. The income is taxable, and then the same is true for when they sell it. So if they go and sell it, then it would be a capital gain that is taxable in the United States as a capital gain with the reduced rates at this point in time. Does that answer the question?
Yes, it does. Thank you.
Mm-hmm.
Okay, I'm just about to text the administrator. The administrator is asking, what languages do you speak? I have Japanese, Korean, Chinese, and Middle East clients.
Okay, we would have to go back to English for those people, unless they've studied any of the other foreign languages that we have in our office.
Okay, so Marsha is texting us, wonderful information and great refresher, Marina. Happy to add you to my team of professionals. Thank you very much, Marsha. We highly appreciate that.
And I have had this slide with our contact information up for a while. We didn't talk about that at the beginning, but I'm assuming that we're getting some type of participant list so that we can send out the presentation again afterwards in an email to everybody. That's what we usually do. So if that's something that we can do, you will all get a copy of the presentation. It will have our contact information again. And if you have any questions at any time, feel free to email me. That is my direct email address that you're seeing on the screen right now. And if it's just a question on how to deal with something or anything, just reach out. I'll be happy to help.
Yeah, I will put Marina's contact information in the chat really quick. I did, when I welcomed all of you guys, I put mine in there already. And again, we talked with Randy and Allison. We will send the whole presentation as a PDF to all of the attendees as soon as possible, as soon as I get all the contact information, so you have something for your files. And again, as Marina said, first consultation is for free. Don't hesitate to give her a call or get in contact with me so I can schedule a quick telephone conference with her. Because we know sometimes when you're in the middle of a closing or close to the contract, and you as a realtor, you have a quick question and just want to move forward, then get in contact with her or with me, and we will find a spot to squeeze you in, and so you can talk to her really quick, and so you can move forward with your contract without getting trouble. So just a quick feedback on this here.
And to add this, the first consultation, the free first consultation means for clients. For you guys, you can call me anytime and as many times as you want. It's always going to be free. Yeah.
Okay, so we have the languages. Marsha, okay, I'm done with that. Teresa says, thank you. Thank you for joining us, Teresa. Van has another question. That wasn't a question, simply to clarify the point, just as you started, LLC not good for Canadian.
Yes, in most cases, yes.
Okay, when I hope that you hear me. Because he says I'm on 2 calls at the same time. It's multitasking when.
Well,
otherwise, just send me a send me an
Yeah.
email or a text. Or
If
something.
you have any more questions, just shoot us an email.
Yeah, don't, feel free. VIP is asking again, what entity is an option for Canadian buyers?
That depends on their situation. What I've seen a lot is either a Canadian trust buys the real estate or a Canadian limited. Or, well, and it depends on, actually it depends on their net worth. In a lot of cases, they also just purchase in their personal names, and that works as well. So it's really, that is something that we would have to look at under the special, under the individual circumstances of the case.
Are you okay with that?
Yes, thank you.
Are you fine? Good.
Yeah, that's fine. Thank you.
You're welcome. Okay, Thomas wants to have a copy of the presentation. We talked about that already. Adela, thank you. Great info, love the examples. Okay, thank you. Great information from Thomas. Julie, great, thanks.
Okay.
Ricardo, thank you. What is the pronunciation of that? Bumi? Is this Japanese? Interesting name. Great presentation, thank you.
It's pronounced Bumi.
Bumi?
Yes.
Thank you.
And it's Nigerian.
Wow. We are international. I love that.
Yeah, thank you.
Yes.
I love it. I just love it, really. So give me a second. Administrator, I apologize. Too late. And here's the question. It used to be that a foreign citizen anticipating selling could apply for the FIRPTA exemption in advance of selling. Is this still possible? Did you get the question, Marina?
Yeah, I think so. I'm not aware that that was ever possible, to be honest with you. The way this works is, so the application for reduced withholding, that's basically their way of, getting halfway out of FIRPTA at least. In order to do that, they do have to have a contract in place. So with most contracts, as you know, the time between the signing of the contract and the closing, is like 30 days, sometimes less, sometimes a little bit more. And that is not enough time for the IRS to process the application for reduced withholding. So in all cases, the withholding has to take place, but they get it back sooner than, if we don't file the application for reduced withholding. The only way really around it is the sales price under the $300,000 if the buyer uses the property as we have discussed. We can't file an application for reduced withholding like 6 months ahead of time because the contract has to be in place. The only time a no FIRPTA can be accomplished is if, and we've done that too, is if, if it's a sale between family members, for example. So the parents want to sell they want to give the property to the children. And the only way that makes sense to do that in a lot of cases is to sell it to the children. Then because since we can determine when the closing is going to happen, we can say, okay, well, schedule the closing in 6 months, but we'll sign a contract now so that we can file the application for zero withholding certificate or a reduced withholding certificate now, and we give the IRS enough time to process that. And then we will have the closing after we receive the reduced withholding certificate. Now, I would think in most situations, a buyer wouldn't agree to, a closing date at some point in time when the IRS sends us a reduced withholding certificate. So that's, to structure that with a third party, that would be really hard to do. If it's a sale between friends or, family members, like I said, that can be done. Does that make sense? Can you give me some feedback on that?
Yeah, when we anticipated a possible loss. So as a result of that, we would submit comparable solds. We would also submit the tax assessment. with the application. And it's been a while ago. I haven't done this recently.
Yeah.
That's why I was asking the question.
No, unfortunately, that won't work anymore.
Okay.
So the
thank you.
IRS only looks at the one case, and they want the numbers for that property.
And it used to be only the Philadelphia office would do that. Can you go to any IRS office now or no?
No, FIRPTA, now it's all handled by FIRPTA unit, and they're in Ogden, Utah, and it's the only IRS office that
Ogden,
works
okay.
those cases.
Okay.
Yeah.
Okay, hope you're fine with that. So we move forward here. Teresa is introducing herself. Teresa, there is a contact information. It's all good. Okay, there is another question from the administrator. Under the US, Canada, and Mexico trade agreement, are there any ownership exemptions when one buys in another country? LE, Canadian buying in US, etc.
Okay, can you unmute yourself and explain that
Yes.
a little? Okay.
Yes, under NAFTA, there were certain benefits that people from Mexico, Canada, and the U.S. would have if they bought into another country. For example, getting loans was an easier process after NAFTA than before NAFTA. Now that we've got the new, and I haven't really looked at the new agreement between the United States, Canada, and Mexico. So that's why I asked you that question, if you knew of any benefits to people from other countries. I can also ask some lenders here locally, and they can tell me.
Not in
We
reference.
deal with a lot of, I'm in Honolulu, so we deal with a lot of international buyers and sellers.
Okay, not in reference to FIRPTA. So if a Canadian buys real estate in the US, he or she is subject to FIRPTA under the rules that we discussed. And the same is true for any foreign person. So that applies to all foreigners. Now, with the United States has tax treaties in place with a whole bunch of countries that sometimes alter the estate tax rules, but none of those do away with FIRPTA. So that applies to any foreigner that sells real estate in the US.
Thank you.
Okay. Okay. Yeah, people want to have, they love the presentation, they want to have a copy, so
Do that.
I put it in the chat already, so we will send a copy of the presentation to all the attendees later. Give me a second. Okay, it's always one. Assist you, okay.
So while Elke is reading through the chat and to see if there's more
It's, some, who is this? Matza likes the presentation. She has recently created a new course called Taxation of Foreign Investments and all that. Maybe it's helpful for the others. Any of you nearly okay? Yeah. Is it Matza? Hopefully I pronounced it right. We stay in touch because she recently created a new course called Taxation of Foreign Investments. And I think we have to stay in touch because of all the foreign and international clients. And she will representing a course through Zoom on the 24th. Okay. Okay, I think I have it.
Okay. Well, like I said, you have our contact information. If you run into any problems, questions, reach out. Thank you for joining us today. And thank you for listening to the presentation. As Elke said, you will get a copy of it. And like I said, feel free to contact us anytime.
Thank you both so much for an excellent presentation that generated a lot of questions. So it was delightful. We really appreciate it. And thanks everyone for attending and staying on. We appreciate it.
Thank you all.
Thank you.
Thank you. Take care.
Have a good day.
Bye.
Thank you.
Thank
Bye-bye.
you. Bye-bye.
Thank you very much.
Randy, thanks. We stay in touch.
I'm going to, okay, I'm going to sign up on the call now, and I'll stay in touch and look forward to talking with you soon.
Okie
right.
dokie, Randy. Thank you very much again.
Thank you. Bye-bye.
Thanks. Randy is still here? Marina, can you hear me?
I can hear you.
Okay. Randy is unmuted. I don't know what's going on here. So,
All right. So I will talk to you later. I can't, okay, let's see.
you're a co-host.
Yeah, I could kick everybody out, but I don't want to do that. All right, but I'm leaving.
Okay, ruf mich an.
Okay.
Ja,
I'll-
danke dir. Ciao, ciao.